Welcome all. In this video, we are going to discuss the FIFO method of pricing material issue. We know that in all kinds of organizations, the materials required by the organization is purchased at a different time and at different prices. So, in the store, there will be a group of materials which are purchased at different prices. So there arises a question: at what price the material should be issued? So there are different methods of pricing material issues, and in this video we are going to discuss first in first out method of pricing material issue. So let us see. We know that the supplier of the raw material is, as per the order received from any organization, he is supplying the raw material to the business organization, and this raw material is received and kept in the store, and there will be at different times and at different prices the same raw material may be purchased. And whenever the production department is in need of material, they will give a request for material to the store, and in return the storekeeper will issue the required quantity of material to the production department, and the production will happen. So you assume that during a particular period, during the month of January, you assume that there is these three transactions has been taken place. That is, in the 1st January, the organization has purchased 200 units of raw material at a rate of rupees 10, and on 3rd January, you see here, it is on 3rd January, the organization is purchasing 400 units of raw material at the rate of rupees 8. Okay, and during 5th of January, organization purchases 300 units of material at the rate of 9. So we know that altogether we have 900 units of material, but the rate is different at the rate of 10, 8, 9, etc. So there is an issue: at what price, when the raw material is required, when raw material is issued, what price we will sell. So under this FIFO method, what we will do is, suppose the organization has given a request, this production department has given a request to the storekeeper that to issue 500 units of raw material. So on 10th January, they have issued, the storekeeper has issued 500 units of raw material. Then how he is issuing under FIFO method? So he will take here we have 200 units at the rate of 10. So in FIFO method, the materials are issued in the order in which they arrived in the organization. That is, that material which arrived first will be issued first. So here you can see that the first material which is arrived first, the material which arrived first is 200 units at the rate of 10. So that will be issued first, 200 at the rate of 10. Then the organization requests the production department given a request for 500 units. So this 200 is not enough. So we will issue from the next lot. So next lot we have 400 units at the rate of 8. So from this 400 we will take the necessary material, that is 300 units, and the same will be rated at 8, that is 300 units at the rate of 8. So this method of issuing material, that is in the order in which the material arrived in the organization, we are making the issue. So that is termed as what? FIFO, first in first out method. Now let us solve a problem. So there is a problem. Prepare the store's ledger account under FIFO method. The information which is given are: in January 1st, 2020, there is an opening stock of 250 units of material at the rate of rupees 1 each. In January 3, there is a purchase of 100 units at the rate of rupees 1.05. In January 5th, also there is another purchase of 200 units at the rate of 1 rupee 5 paise. Again in January 7th, there is an issue of material at the rate of 400 units. And in January 10, further purchased 400 units at the rate of rupees 1.20. In January 12, there is issue of 150 units. Again in January 15th, there is a further issue of 100 units. In January 16th, there is a fresh purchase of 100 units at the rate of rupees 1. In January 25th, there is another fresh purchase of 200 units at the rate of rupees 1.25. And in January 31st, we have an issue of 300 units. So this is the problem. So here we are going to solve this problem on the basis of FIFO method, that is first in first out method. So let us see how it can be solved. Let us solve the problem. So you prepare a store's ledger account. So for this you have to prepare 3 main columns, a date column and 3 main columns. One is a receipt column, the second one is the issue column, issue of material, and the third one is balance. That is, the receipt column refers to the entries related with the purchase of material will be shown in the receipt column. Entries related with the issue of raw material will be shown in the issue column, and the balance available in the organization, that will be shown in the balance column. And for this, each of these 3 columns, we should have 3 sub columns. One is quantity of material, rate per unit of material, then rate multiplied with the quantity, that will give the amount, value. So for receipt, for issue, and for balance, we should have these 3 columns. Okay, so let us see the question. So the question, the first thing they are saying that in 2020 January 1st, there is an opening stock of 250 units at rupees 1. So you show it, that is, there is no receipt, there is no issue. 1st January, there is only a balance, opening balance, that is quantity is 250, rate 1, amount 250. Okay, then in the second case, you see in January 3rd, purchased 100 units of material at 1.05 price. Okay, so this is a purchase, so it is receipt. In the receipt column, you enter the details like 100 units. How much units? 100 units purchased, 1.05 paise. So multiply this, 105 rupees is the amount. Then you show the balance, closing balance. So what is the closing balance? There is already a 250 units because it is already available in the organization at rupees 1. Since the rate is 1, these and the fresh purchase is at rupees 1.5. Since these 2 rates are different, these 2 should be shown separately. So what we will show is 250 units at the rate of rupees 1, 250 rupees. Then 100 units, that the purchase on 3rd January at the rate of 1.05, 105 rupees. Okay, so this is the 2nd January 3rd purchase. Okay, then you see the next column, that is in January 5th, there is further purchase of 200 units at rupees 1.05. 200 units are further purchased on January 5th. You see in January 5th, what happens is, if again we are purchasing 200 units, the rate is 1.05. This multiplied with 200 and 1.05, we get 210. Okay, then show the balance. Closing balance is opening balance, what we have shown in the earlier column, that is 250 at the rate of 1, 250. Again there is a 100 units, the rate is 1.05. The fresh purchase is also at the same rate. So what we can do is we can add together. So this 100 will be added with 200. So that is 300. Rate is 1.05. Okay, 1.05. Balance is 350. Okay, 350. On 7th January, there is an issued 400 units. That is, on 7th January in the organization there was an issue of 400 units. So let us see how this entry was recorded. 400 units. So you write the date column 7. On 7th there is no entries in the receipt column because we are issuing. So in the issue column, how much you are issuing? We are issuing 400 units. So you look into the order, that is, first in the order in which they arrived, we will issue in the order in which they arrived. So here it is 250 at the rate of 1, that will be taken first. 250 at the rate of 1, 250. Now we have issued 250 units. What is the order? 400 units, 400. So further 150 units is needed. So we will look at here. So here we have 300 units. So we will take 150 from this 300. 150, the rate is same, that is 1.05. Okay, 1.05. Multiply this, we will get 157.50. Okay, so 400 units are issued. Then what is the balance available here? Together we have 550 units here. Among these 550 units, we have issued 400 units. So balance is 150 units at the rate of 1.05. The balance amount is 157. That is the closing balance. Okay. Then further, you see in January 10, what has happened? Purchased 400 units at the rate of rupees 1.20. Purchased January 10th. Purchased 400 units at the rate of rupees 1.20. So January 10 you take. In January 10 there is a receipt purchase of 400 units at the rate of 1.20. Altogether it is 480 rupees. 480 rupees. Okay. And we have to show it in the closing balance. Okay, in the balance column we have earlier we have a balance of 150 units at the rate of 1.05. Since the rates are different, that will be shown separately. 150 at a 1.05, amount 157.5. Then there is the purchase that we have made today, 400 units at the rate of 1.20. The amount is 480. So this is the closing balance on 10th January. 10th January. This is the closing balance. Okay, in January 10, there is an issue of 150 units. January 12th, there is an issue of 150 units. January 12th. So you take 12th January. Okay, issue column 150 units. Where these 150 units are taking the first one, that is 150 units at the rate of 1.05, that will be issued. Okay, then the balance is only 400 units at the rate of 1.20, that will be shown here. Okay, so that is the closing balance on 12th January. Again, what happens is in January 15th, there is a further issue of 100 units. In January 15th, there is a issue of 100 units. So see, in 15th January, we are further issuing 100 units. So this 100 units are taken from where? This 400 units at the rate of 1.20. So 100, 1.20, 120. So what is the balance available? From this 400, we have issued 100 units. So the balance is 300. The rate is same. amount is multiplied. So rupees 360, that is the amount available. And in January 16th, purchased 100 units at the rate of rupees 1. Purchased 100 units. So in January 16th, 100 units at the rate of 1 rupee is purchased, 100 rupees. The balance already in the earlier column, that is 300, that will be shown here. The 100, the fresh purchase, that will be shown here. This is the closing balance on 16th January. And what happens next is in January 25th, purchased 200 units at the rate of 1.25 paise. Purchased 200 units at the rate of 1.25. So here see 25th January, 200 units are received at the rate of 1.25. Multiply these two, 250 rupees. Okay. The closing balance that we are already having is 300 units and 100 units. So you take down repeatedly the same. Okay, repeat the same, 300 and 100, same. Again you write this one. This is the balance. Okay. Because why we are showing these three quantities separately is the rates are different. 300 units at the rate of 1.2, 100 units at the rate of 1, 200 units at the rate of 1.25. Okay. Then next, in January 31st, there is a further issue of 300 units. January 31st, there is a further issue of 300 units. So you see here in January 31st, there is an issue of 300 units. So these 300 are available in the first category. So we are taking it from there. So this 300 is available, 300 to 1.20. Then the amount is 360. Okay, what is the balance available? The 100 at the rate of 1 rupee, 200 at the rate of 1.25 is available. This is the closing balance. So this is the closing balance, and that's all about the FIFO method. Then one more thing we have to do. What is the value of the closing stock in this problem? That should be done. The value of the closing stock, we have to do that. So you see here, you have to calculate the value of the closing stock. So you see what we are doing is we are taking the closing balance column, that is 100 units at the rate of 1. Okay, so 100 units at the rate of rupees 1, that is the value is 100 rupees. 200 units at the rate of 1.25 rupees, that is the amount is 250. Okay, so you add these two, that is amount will be 350. The total quantities is 300 units. So value of closing stock is 300 units of 350 rupees. So this is the closing stock. So this is the method of issuing method that we are following in the case of FIFO method. Okay, that is the materials are issued in the order in which they are arrived in the organization. This is comparatively one of the easiest methods of pricing material issues. There are no complications. We are just issuing materials in the order in which they have arrived. So only thing that we have to take into consideration, keep in our mind, is while showing the closing balance, we have to keep in mind if the rates are different, rates of materials are different, they should be shown in different categories. Okay, so that is the only thing. Simply FIFO is the issuing of material in the order in which they are received in the store. Okay, thank you.